At our Money Show Symposium in December 2024, my next guest dedicated his entire presentation to one tech stock. No, really. In front of the audience in Sarasota, he called it the clear leader ready to take over the future. And between that date and today, the stock is already up 54%. But what does the 20-plus year veteran of the financial services industry think about the name now? And what else does he like in the tech sector or otherwise? Let's find out. My guest is Michael Lee, founder of the investment and wealth planning firm Michael Lee Strategies. Michael, welcome to the Money Show MoneyMasters Podcast. Hi, so Mike, it's not very often that a guest talks about one stock from entirely from the main stage, but that's what you did in Sarasota back in December. So what is that stock and why do you do it?
So that stock is Palantir. The stock is up an unconscionable amounts over the last year. I think from like the low 20s to almost 120 as we're speaking right now. And it was expensive, on a price to earnings ratio and a price to sales ratio at 20. It's much more expensive now. And the question is why? And the world has changed from a data management standpoint.
Yep.
In that the way data is ingested to a corporation and used on a day-to-day basis is forever changed. We're never going back. And I'd liken this change to moving from a horse and buggy to an internal combustion engine, or from, hand making things to a completely automated assembly line.
Yeah.
Might even be a better comparison, and that of course is artificial intelligence. And so we're, I think, 2.5 weeks off of DeepSeek, which rocked the markets, and that touched on a lot of topics, and the market read it the opposite way it should have, in that something called Jevon's paradox, in that where the faster and more advanced a technology gets and the cheaper it gets, the more widely used it is. And so if I can get 10x or 20x the compute or computing power out of a NVIDIA GPU now, as before DeepSeek, it makes much more sense to invest in one because my return on investment is exponentially higher. So it's like we're at a turning point. I think Wall Street is completely missing it. But to bring it back to Palantir, what's going on with these data is it all goes into a large language model. And for that large language model to be applied to a business, you need a software solution, and Palantir is without competition. And so as people are starting to get the arms around about how big this artificial intelligence, this data revolution that's going on right now is, they're starting to see that there's a clear leader in the space, and they're $4 billion in revenue next year may actually be $5 billion, and 28 and 29 maybe 20 or 25 billion at 10 plus billion in free cash flow, 15 billion in free cash flow, which could make it $1 trillion company given the margins and how spectacular their technology is. And they've been doing this for so long. Was funded by the CIA in 2004. And so now we're 20 years into them figuring out these problems, solving these problems, and they've only had an enterprise or corporate product for 2 years. So like all these forces are converging. I would love to be able to go back and buy it like in the low 70s. We may well get a round trip back there, but like I've never seen a turning point in my career the way that we're seeing things right now.
Fair enough. Mike, I want to ask you about the use cases. I kind of think that was one of the most fascinating parts of the story there, that back in December when you talked about Palantir, is the different industries that are using their tech. And how is that going to evolve?
So Palantir's, their CTO goes on CNBC and they talks about this on their YouTube channel, in that, like if you're buying Palantir software, you're looking for ROI day one, not a project that works 2 and 3 years down the road where you buy Salesforce and you got to spend more on consultants implementing it than you do on the software. And there's still, look how well Salesforce is done. Palantir, they want to come in and work on things right away. So one of the best examples and way to conceptually visualize this is what they've done in hospitals. So if you walk into an ER, there's probably a nurse or a doctor or an administrator, but a couple of people sitting at the front desk taking your data inputs. And then they're manually sitting there saying, hey, this person has a broken arm. We're going to send him to this room and assign this doctor. That person needs stitches. They'll go over there. This person's having a heart attack. They'll go over there. Well, what happens with, but it's a manual process.
Yeah.
And to try to solve these problems, like you have smart people that have their logic about how they want to allocate doctors to rooms and staff, but the goal for patient care is to, get people seen as quickly as possible. From a business standpoint, for the hospitals to free up as much emergency room space as possible and get that turnover almost akin to a restaurant. So, at the end of 2022, they had 0 hospitals as clients. Now now it's close to a quarter of the hospital beds in the country are being run by Palantir. And so what they have done is they've automated that process of allocating patients to rooms, assigning doctors to the rooms, and using machine learning to predict staffing for the hospitals. And so at Tampa General, right by us, they've been able to do that with 95% accuracy to use machine learning to say, hey, we need this many nurses on staff, this many doctors on staff. Okay. Another unbelievable use case is AIG. Just talked about it on their earnings call, in that Palantir is essential to their underwriting process. And so when they go into underwrite for business, they can produce quotes in 3 hours in a process that used to take 2 weeks. And so if you think about what happens there in an underwriting process, you're looking at all the different forms of risk, all the pricing to reinsure it, all the past, historical claims that they've had, your predictive models to the future. Historically, there's been a team of smart people sitting there putting all these pieces together manually and then figuring it out. Okay, all that just happens instantaneously right now. Those same smart people are working on the inputs, but the machine is in a sense making the sausage in a couple of hours what everybody could do in a few weeks. So you can now bid on infinitely more business than you could prior. I don't, time will tell whether it's more predictive, but it's a distinct competitive advantage where there is like almost a day one return on investment, profitable investment for someone going in and buying the software. And how it's gone historically in all these tech trends is first you have the hardware, and you build up the infrastructure, then you have the software to implement it.
Got it. As much as I'd love to talk about Palantir for our entire segment, I think I'd be cheating our listeners, our viewers, if we didn't look at some of the other ideas that you have out there. I mean, as you survey this market as we're chatting, NASDAQ's been a little choppy so far this year after a great 24. What other kind of names have you heard about in this earnings cycle that think have a good story too?
So again, like I just don't think the market has their arms around how big this AI trend is. And you're looking at trillions of dollars of investment. And if you think about data on a whole, as a company takes it in, whatever the organization does, whether it's a nonprofit, whether it's a government organization, whether it's a for-profit company, either private or public, um, every bit of data is going to get fed into a large language model at some point in the future. We do not have anywhere near the amount of infrastructure to figure that out. And so if you look at a Microsoft in their earnings, the stock got crushed because they missed on data center growth by, I think, 1.1 percentage points. And Google, Amazon, and Microsoft are all saying the same thing, in that they are missing because they are capacity constrained, meaning the demand far outstrips the supply. And so, NVIDIA, for every GPU they sell, they have demand for 15. Like, I just, and so the street is looking at all of these names in this complex. Like, what's the ROI? Why, like, how much earnings am I going to see next quarter, without realizing, again, like, we've just gone from having 50 people in a room assemble parts by hand to an automated assembly line. So every organization is going to need to have this as a part of their data intake. And if you look at the way data is being created, so in 2025, we're going to generate as much data as we were predicted to in 2030. And so like the Internet of Things and everything, it's all like a hockey stick growth. So as more data comes in, as it gets cheaper to compute, the more projects are going to get built out. And like, I don't like to use the word AI or Gen AI because I think of Terminator 2 and like the T-1000 running at you, where it's really just it's just taking data. It's taking that underwriting process that was 2 weeks long and getting it down to 3 hours, soon enough an hour, soon enough 30 minutes. Like that's what we're thinking. Or every single decision anybody makes of significance is somewhat data based, and it's organizing all that data and the amount of data that's being created. So at AMD, again, like they beat sales, beat estimates, raised guidance, wasn't quite as much as the street wanted. The stock got crushed. It's trading at 15 times forward earnings, and in reality, it's probably more like 12 times forward earnings. Because the earnings will beat. So to me, AMD is just a screaming buy. Their chief commercial officer just bought $1 million worth of stock. So like, you could say whatever you want about insider selling, but when an insider reaches into his own pocket to buy the stock, especially with the stock awards, all these executives get in the queue, it's really, it's really an unbelievable opportunity. And so like, obviously Nvidia is at 135. It was at 150 roughly 6 months ago. And the sales and revenue have increased substantially. The numbers are too low going out a year. So you're looking at 24, 25, 4 times forward earnings for them, where it's historically traded between 35 and 40. And then you can go down this infrastructure play, Google, Microsoft, Amazon, just Oracle, all of this. The runway is just so much bigger than the street gives credit for. And again, like, this is the one time in my career where I can just say the majority of sell side analysts and a majority of buy side investors, they cannot see the forest from the trees with the kind of the single greatest opportunity that's out there. So I just, seeing this in front of me, the biggest companies, I'm absolutely as bullish as can be. This has nothing to do with tariffs. This has nothing to do with inflation. This has nothing to do with interest rates. This is a trend that's happening, whether you like it or not, and the street is missing the size of it, which is why, like a Palantir, can get pushed by mostly retail investors, from the low 20s to almost 120 inside of a year, because it takes a little bit more vision, a little foresight into the future.
Got it. I don't, you touched on some of those macro points, and I think we could probably have that for another discussion. There's a lot to cover there, but I do want to briefly just ask you, given where we are, sort of the economic cycle, political cycle, whatever, anything outside of tech, sector-wise or name-wise, that you think looks pretty attractive here too?
Yeah, so going on that insider buying trend, Ally Financial, a lot of the executives went in and bought, and like, there's a lot of noise around used car defaults, and Ally Financial is the old GMAC, doing auto loans, trading at 1 times book, 3% dividend yield. It doesn't seem super crazy or sexy, but the reality is, like, you probably got, you're going to have book value increase over the next year, and it can go to 1.3 or 1.4 times book within the next year. It's at 30 or 40% in the sleepy stock. That's where, I see some upside there. And so, Tesla's a car company, but it's, so automated, autonomous driving. So Tesla thinks they're gonna have driverless taxis in Austin by the summer, which is mind-boggling. That'll be one of the first things they've had early, because that was a 2026 thing. And then they have this robotics division on the other end, and the stocks at 340, 350, down from, over 400. It's worth a look at there, and it's a call option on, okay, do you want a robot in your home to do your laundry, wash your floor, do your dishes, and all sorts of cool stuff, thinking 2 or 3 years from now. And then the other one is Mobileye. So Mobileye is a autonomous driving software, and so there's other people out there that have the chips, but Mobileye already has a deal with VW to be the autonomous driving partner for Volkswagen. In 2026, it's going to be in like a third of their cars. But autonomous driving is happening. And the way that I see it playing out is that people with longer commutes that are driving 20 to 50 minutes on the highway or an hour and a half on the highway to and from work, when you get to level 3 autonomous driving, you don't need to have your hands on the wheel. You don't need to pay attention. But you can be looking at your phone, where if you're in a Tesla right now and you have the autonomous driving, you don't need your hands on the wheel. But if you pick up your phone, like, you get an alert, like, it's not like the level 3, like, for those long highway miles. So someone like you going from coast to coast, when you're on Alligator Alley, you could be working. Yeah, you know,
Fair enough.
instead of instead of paying attention to the road. And like, then from there, I think people get more comfortable with it taking them off the highway and to their homes. So the question for them becomes, do GM and Ford and Honda and Hyundai, okay, do they contract out to Waymo? Do they use Tesla software, or do they use Mobileye? Mobileye is your only pure play in the area. The stock has just been crushed. They're already in a lot of cars. If you have a newer car and you're getting close to somebody and all of a sudden your car starts automatically braking and beeping, okay, chances are that's a Mobileye software. So they already have the level 3 autonomous software that works, and it's just a matter of how many more partners beyond VW you can get. And this is an essential component for automakers, because this autonomous driving feature will be a monthly payment. You're going to pay $30 or $50. And the first time you saw this was BMW try to charge for heated seats. It didn't go so well, but there's no reoccurring revenue for these OEMs, for these automakers. So to be able to charge a subscription fee on a monthly basis to the people that buy their cars, I mean, that's a huge upside. Mobileye will not only get paid to get in the cars, they'll get a percentage of that revenue. So like, this could be a 10x in the next 4 or 5 years. There's a chance Qualcomm, who makes the chips, but doesn't have a software solution, takes them out far above where they are right now. It's a relatively cheap stock, and it's 15, 16, $17, somewhere in there. If they get some good announcements from like a Hyundai or a Honda or Stellantis, stock could double almost overnight. But I think this is kind of a 3 to 5 year play that could easily be a 10x with where autonomous driving is going to happen. So, um, I'm sure there's other ideas for trades and other things that are out there, but from my investment standpoint, it's like upside, downside, and like, where's a trend that's happening that's not going to be. So you can bang this AI drum, and I'm going to continue to do it, but it's the world is changing. We don't have we don't have the infrastructure anyway. VRT is a company that builds the infrastructure for data warehouses. That's another stock to look at. It just there's just not enough of this out there. I don't think the street has their arms around it. I think people are saying, like Satya Nadella, like, how can you spend 70, 80, $100 billion investing in capex on AI, and and they're not really seeing the forest from the trees. And where Satya Nadella, or I'm sorry, Jensen Huang from NVIDIA, saying for every NVIDIA GPU Microsoft buys, they could turn around and rent it for $5. And so it's just like, we're just so far from the end of this trend, and there's so much more investment and money to be made, and it's going to result in a much higher much higher productivity in the S&P 500 in American companies where this is being fully embraced. But that's downstream.
Yeah.
Right. So AIG's earnings from Palantir, they're probably seeing something right now in 2 or 3 years, if none of their competitors, by Palantir. You'll see it there. But it's like, I could not be more excited if you can't, from me, which I think also says a little bit more about me than anything else.
Well, I'll tell you a true story. I rode my first Waymo when I was just in Phoenix recently, and pretty interesting experience. 20-minute drives, give or take, and not really any flubs, nothing out of the ordinary. So, yeah, I hear you on that one. Anyways, Mike, listen, thank you so much. For your insights here, viewers. If you want to learn more from Mike, he's going to be taking part in our Money Show Better Investing, Smarter Trading Summit online in March. It's 100% free to attend. You can just find out more with the link in the video below. Click that. You'll get his latest insights come March on some of the stocks we talked about here and probably some new names too. Mike, again, thank you so much for your time.
Awesome, Mike. Thank you very much.